Good morning, and thanks so much for joining in. Welcome to you. This is NDTV Profit. My name is Alex Mathew, and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll tell you everything that you need to know so that you can start on the right foot. Let's start with the headlines. Asian markets start lower this morning. Separately, investors see Japan's December wholesale inflation flat as against expectations of a fall of 3%. Gift Nifty indicates yet another positive start for Indian equities. Houthis threaten to hit more U.S.-owned containers while Iran seizes yet another oil tanker in Oman. Oil edges lower as investors pay little attention to rising West Asia conflict. India has a special place at Davos. World Economic Forum chief says the economy can reach $10 trillion. IKEA says that it looks at India as a production hub for export. India and the UAE settle trade in rupees for gold, among other commodities. That's an NDTV Profit exclusive. And the Adani Group offers bigger flats to residents of Dharavi as part of redevelopment. Now, in the top news globally, Houthi militants hit a U.S.-owned commercial ship carrying steel products off the coast of Yemen with an anti-ship ballistic missile yesterday. The militant group now threatens to hit more U.S.-owned vessels, and oil investors, though, seem to be paying only little attention to the increase in the conflict as Brent crude traded lower this morning, and even when the incident took place. It's trading around that $78 to the barrel mark. Separately, Asian markets, at least the early risers, began lower, and that is likely to be the case across the board in trade today as well. In fact, you have the Hang Seng that's trading with cuts of about 1/3%. Of course, the Chinese markets have only just opened up, so we'll have to see how they settle. The Nikkei 225 down about 0.6%. The Gift Nifty also indicating at this juncture yet another positive start for the Nifty 50 after the markets closed at record highs yesterday. All right, we've joined now by Richard Harris, the Chief Executive of Port Shelter Investment Management. Richard, thanks so much for joining us this morning. Not too much to speak of in terms of global cues this morning, but I want to, zoom out and talk a little bit about where we stand at the start of January. And if I remember correctly, you had spoken about this last month where you said that you wait for a little bit of a cue at the start of the year. What are those latest cues indicating to you? Are you still expecting the number of rate cuts that were initially expected, 7, I believe? Has that gone down? And what are you expecting for Asian markets?
Well, I think after the recent jobs figures, yes, that number's gone down in the US. I think people are looking more at cuts of 3, which I think reinforces my view that interest rates probably are not going to fall as much as the market thinks or the market hopes. And of course, that's likely to be a source of disappointment further down the line. The year has started in a quite interesting manner, basically by continuing what happened last year. Very often years tend to portend a change, a reversal in what's happened so far. But the markets have carried on. They still seem to be relatively bullish and taking more news generally as being positive rather than negative.
Okay. What do you make of the brewing concerns or in the West Asia region? The reason I ask is because seemingly traders in the commodities market are sanguine despite the news of tensions, the news of more attacks on U.S.-owned vessels. How do you think that is going to pan out?
Well, I think what's happened, it's extraordinary what's happened over the last couple of years. We've got 2 wars and maybe a couple of other ones like Venezuela bubbling around. We've had a run on the banks in the U.S., in March last year. The markets have survived quite a barrage of really bad news. And I think what we have to try and focus on is, do these events really change matters that much? Yes, the invasion of Ukraine caused oil prices to go up, but of course that's come back quite sharply. The Houthi incident around the Gulf is also probably unlikely to have that much of an impact on oil prices. Remember, a lot of oil gets shipped from, say, Saudi Arabia by pipeline. so that diverse that region. And there's a lot more oil produced in the US as well. So you can see why oil isn't really reacting to this news. Yes, we are likely to get some inflation as a result of cargoes having to go around the Cape of Good Hope. But, at the end of the day, that's probably marginal. And I think that kind of inflation is likely to be lost in other prices. So at the moment, we've had a flurry of really rather negative global news, but the markets have taken it fairly bravely. And I think they're likely to do that unless we see some major change in the economics.
Last question, and that relates to India in the context of the Asian markets. The Nifty 50 at above 22,000 at this juncture and has gone up very sharply over the last 3 months or so. How do you see it in the context of opportunities in the Asian markets?
Well, it's been a magical rise, and I think that's because India has probably benefited from some of the slowdown that China's showing. One thing I think we have to remember is that this year is probably the year of the Chinese economy. And by that, I mean that the Chinese economy picks up, we will see a pickup in inflation. We will see things move. If the Chinese economy continues to be sluggish, then they will continue to export disinflation, and that's likely to be positive for Western markets. So weakish China is probably good for India. I think that's what's helped. But I think overall, we have to remember that these markets are now quite high. They've moved quite a long way. They are now quite fragile to seriously bad economic news. And I suspect that's down the pipeline. The big question is when?
For joining in and giving us your perspective.
Thanks, Alex.
All right, let's turn to the Indian equity markets. And indeed, the question mark is, do we see a little bit of a stutter? Let's talk about the latest cues from the F&O space then. And Agam is joining in to give you some perspective on that.
Right, so things can get a bit confusing at this point, considering
Welcome back. You're watching All You Need to Know. The Nifty 50 above 22,000 and in fact very closer to 22,100 mark. The question is, where do we go from here? The cues from the F&O space are what you should focus on this morning. Agam is joining in to tell you more. Agam, well, that's $1 million question.
Yeah, it really is, and it's a hard one to answer as well, Alex, because we are in uncharted territory, and there's no saying, because based on technical analysis, there's no upper bound at the moment, considering we are at a new life high. That said, we did see more and more additions towards fresh longs as far as the Nifty is concerned, even as it advanced, made a new record level, now well above the mark of 22,000, up around 1%, even as we see a 4% addition in open interest towards fresh longs. And the Bank Nifty, on the other hand, has also starting to advance. We haven't seen as much addition in open interest, but an up move around 1% all the same, even as it moves back above the mark of 48,000. Bank Nifty has been lacking in this up move for as far as your benchmarks go. The question really is that can we in fact see the Bank Nifty to catch up with the rest of the major benchmarks? Now, for now, as you can see, as far as the Nifty is concerned, we have max open interest in the 22,000 puts. This has changed substantially from the max open interest in terms of calls just a few days ago. So it has kind of flipped over on its head. And for now, on the higher end, we're keeping an eye on 22,500. So the 500-point range, as far as the Nifty goes, has shifted higher with the low band around at around 22,000. Of course, on the higher end, it's 22,500. Moving on, in terms of what's happened yesterday, as well as one might expect, there's a little more writing around 22,000, 22,100 puts as well. To talk about stocks quickly, well, let's pull that list up and take a look at where we are looking at a lot of changes. So we do have fresh shorts in L&T Technologies, which will, of course, also announce its earnings today. So keep an eye on that one. HDFC Life, ICICI Lombard also in fray to announce earnings today. With all of these counters have seen fresh shorts. And in terms of stocks which are seen unwinding, in short covering coming from Metropolis, BHEL, Polycab, HDFC, AMC, and Gujarat Gas. Polycab is the interesting one. It's climbed back above the mark of 4,000, and we need to wait and watch whether or not there could, in fact, be further short covering. But on the whole, Alex, once again, all eyes will be on HDFC Bank and what that can do for the banking indices.
In fact, that's exactly what we're talking about next. Thanks so much, Agam, for that. HDFC Bank to report its December quarter earnings today, and Agam was talking about whether or not the Bank Nifty will play catch-up. Perhaps to a certain extent, this is going to have a bearing on that, considering the weightage. But let's talk about the key numbers, and Vishwanath is joining in to tell you just that. Vishy, over to you.
HDFC Bank is set to announce its third quarter results on Tuesday, where the bank is expected to report a marginal dip or a flat net profit on a quarter-on-quarter basis. What analysts are pointing out is that there's likely to be a slightly higher provisional requirement during the third quarter, primarily because the Reserve Bank of India has raised the risk weights on certain unsecured loans, which makes it slightly more expensive for the banks to lend out this kind of money. Apart from that, the net interest income for the bank is expected to rise by about 8% odd. That is what the analysts are estimating at this stage. What we do understand is that deposit growth is likely to be slightly slower than what was previously anticipated, while the loan growth is likely to remain stable. Now, of course, when the bank released its provisional figures, what the bank had pointed out was that total advances would rise about 5% on a quarter-on-quarter basis to a little over 24.6 lakh crore, close to 24.7 lakh crore, while on the total deposit front, you would see deposits rise about 1.9% quarter-on-quarter, a little less than the 2% mark, well, with deposits lower than advances at 22.14 lakh crore. Now, all of this points to a situation because a bunch of loans were transferred into the HDFC Bank portfolio because of the merger with HDFC Limited. However, on the deposit front, the bank is still catching up, and therefore the credit deposit ratio for the bank is on the higher side, above the 100% mark. However, the bank is expected to increase its branch network over the coming year and thereby improve the deposit numbers in the coming quarters. What we also understand is that the NIM position for the bank is likely to have bottomed out in the second quarter, and from the third quarter onwards, we're likely to see the net interest margin improve quarter on quarter at least, with the CASA ratio also improving for HDFC Bank.
All right, one to watch out for. Thanks so much, Vishy, for bringing us those details. Do tune in to NDTV Profit for the live analysis of those numbers. for the third quarter. The World Economic Forum kicked off yesterday at Davos, Switzerland, and at NDTV Profit, we had the opportunity to interact with some of the key figures on the opportunities to keep in mind with regard to India. Neeraj Shah joins us, or has this wrap of the key highlights from the first day at Davos.
Well, day one at the World Economic Forum at Davos was marked by some pretty interesting conversations at the Congress Center on rebuilding trust. But while that happened within the premises of the WEF, what we did at NDTV Profit and the NDTV network went well beyond that. We were talking to guests about the India promise, with India being the oasis of growth in a world which is marked by being fractured, deglobalized, or if you will, globalization, and more. So here's what conversationalists told us. Manish Kejriwal of Kedara mentioned that he saw more promise and investments in infrastructure projects in India. It was an interesting point wherein he said that global private equity majors would be now at the forefront of making large investments in infra in India, something that was absent over the last so many years. He spoke about how the government is now no longer being headwinds, but providing tailwinds to global investors, and which was a pretty interesting point. Niranjan Gupta of Hero MotoCorp, while confident about the growth story of Hero, because he said that Hero is moving from being a company which thrived at the regular category or the non-premium category or the lower horsepower category or the lower CC category to the higher CC category and the premium category as well. He did mention that he saw substantial interest into the India conversation, both on the manufacturing side as well as manufacturing in India for the world. We saw some pretty interesting conversations with Noshir Kaka, who is PwC's co-lead of technology globally, and he mentioned that companies across the world are talking about making significant investments in India, and global capability centers upping their demand for real estate in India, particularly in South India, was just the tip of the iceberg. And talking about global companies, companies like IKEA, companies like Checkpoint, which is an $18 billion company in security systems, spoke about how India is emerging as the forefront, both in terms of getting talent for the world as well as becoming a market for consumption, both B2B and B2C. So a lot of optimism around India on day one of the WEF, at least in conversations that we've had on NDTV Profit and the NDTV network, none less than the one which was marked by Borge Brende of the WEF, who said that India will probably become a $10 trillion economy by the turn of this decade. And he saw multiple sectors which will benefit out of this growth that is happening in India. Thanks so much for tuning into the NDTV network all through today. And we promise to bring you the best and the most relevant voices over the course of the next 4 days from WEF at Davos.
All right, now let's get you a slice of the conversation that Neeraj had with IKEA's deputy chief. And they spoke about the fact that IKEA is seeing India as a manufacturing hub. Listen in.
I really believe in the unique opportunity that India has, and we all have, in order to grow production and sourcing. But in order to do that, we need to have these two things that are prerequisites for us. We need more IKEA stores, so we need to have more support and more partnership with the regional government, with the states, in order to have good approval process, in order to have good clearance to the projects, in order, it's big investment, and the closer we are to the metro connection, the better. So we want to keep going with the land acquisition and opening more stores in India. So we need the partnership with the state governments. And the second thing we need is this harmonization of the standard, which is extremely important. And it's perfect because India direction from the government is to increase the quality standard, which is fantastic. Right. And now we want to secure the harmonization with international standard. So it's not producing India for India, it's producing India for both India and for the entire world.
All right, let's turn to stock-specific action then, and we've got a few to tell you about. Apart from the earnings, of course, you have Nalco that has signed its first-ever lithium exploration and mining agreement, and you've also got Sarda on the back of an order win. Anushi is joining us to tell you more about that. Anushi, over to you.
Morning, Alex. So I'll start off with Nalco first, which has signed Government of India's first ever lithium exploration and mining through Kabil, which is Khanij Videsh India, a JV between Nalco, Hindustan Copper and Mineral Exploration to explore about 5 lithium brine blocks at a projected cost of about 200 crores. Next is Sarda Energy Minerals Limited, which has received a 150 crore order from Gensol Engineering Limited for installation of solar power plant of 50 megawatt direct current in Chhattisgarh. Other than that, the company is also coming out with its results on 3rd February. Next on the list is Rail Vikas Nigam Limited, which was buzzing in yesterday with the stock gaining about 9%. The company has emerged as the lowest bidder for a consideration of 251 crore for supply, installation, testing and commissioning of 11 kilovolt line associated works, which is to be executed within 24 months. Then we have PNC Infratech, which has signed definitive agreements with Highways Infrastructure Trust to dispose of about 11 hybrid annuity road assets and 1 toll road asset for an enterprise value of about 9,005 crores. So these 11 assets and the 1 toll road asset made about 42.1% of the consolidated revenue. And lastly in the list is TCX System Limited, which would be focused through its QIP, wherein they expect to raise about 500 crores at a issue price of rupees 341, which is at a discount of about 7% compared to its yesterday's closing price. So these should be the stocks in focus for today.
All right. Thanks so much, Anushi, for bringing us those details. And turning to earnings as well, there are a couple of mid-cap companies that have reported numbers that will be in focus today, among them Jio Financial Services as well as Angel One. We've got Varsha joining in to tell you more about that. Varsha, take it away.
Good morning, Alex. So let's start with Jio Financial Services, where the total income was down almost 10% and net profit was down 21%. Now, the decline in profit was largely due to higher other operating expenses, which rose 69% sequentially. The staff expenses also increased to 16% quarter on quarter. Also, if you see on a consolidated basis, the company's net profit fell 56%. Now, this was on account of no dividend income in the quarter ended December. Then we have Angel One, wherein total income was up almost 40%, while the net profit was up 16%, boosted by jump in orders and the addition of new clients. Also, if you see the key highlights for the company, its daily orders rose on an average of 57%, while client acquisition surged over a multifold. Also, they acquired more than million clients in a month and 2.5 million clients in a quarter. Then we have Choice International, where revenue and net profit was up over 2x. Now, if you see the key highlights for the company, broking and distribution business grew almost 92%, followed by number of demat accounts, if you see, grew 26% year on year. Also, total loan book for NBFC segment stood at 468 crore. And lastly, we have Kesoram Industries, where revenue was down almost 3%, while EBITDA was up 27%. Now, this was due to, if you see the margins for the company was 10% versus 8% last year. Now, this was due to lower cost of raw materials, and the net loss for the company was 49 crore versus loss of 48 crore last year.
Much, Varsha, for bringing us those details. Some of those stocks you should watch very closely. Angel One, for one, has gone up about 200% over the last 1 year or so. Let's talk about the latest update from brokerage firm UBS. It has initiated coverage on Paytm, and UBS expects a moderating top-line CAGR of 21% through FY28. We've got Harsh joining in to tell us why that has come through. Harsh, what is UBS saying?
Well, yes, target price of 900, Alex. Good morning. And Paytm back in focus. The top line has grown at a 50% plus CAGR over the last 3 to 4 years. And that, what UBS believes, is going to taper going forward. But what they are seeming to suggest is there's an increased focus when it comes to profitability, which is well known in market circles as well. What they're suggesting is as profitability metrics start getting better, they're expecting the EBITDA margins to be clocked at roughly the 20% kind of a number. And that's what they've even considered when they are looking at their valuation. So they valued it on the basis of a DCF method of valuation, and they're expecting EBITDA to come in by around 20% all the way through FY28 as well as terminal. And that's what they factored in with regard to their valuations. They're expecting that Paytm, which has a very good foothold in the payments business, will continue to do well with regard to where payments is concerned, and also loan growth. They are expecting asset quality to remain quite healthy when it comes to Paytm, because they believe that Paytm has the analytics to figure out as to where asset quality is going bad, and they therefore believe that Paytm has a bit of a leg up when it comes to loan distribution and that particular business and that particular space, and they're expecting that foothold, that kind of that kind of unique niche to be maintained by Paytm, and therefore they believe that Paytm has a leg up in that particular domain. They're expecting that, or what they're suggesting is that Paytm currently trades at a discount to global peers. They're kind of benchmarking Paytm to some of the global peers, and on the basis of that 20% EBITDA margin, they're valuing the stock at 900 a share.
All right, thanks so much, Harsh, for bringing us those details. Some action from the primary markets. Jyoti CNC Automation is the first main board listing of 2024 that is expected today, and it's in fact expected to list at a premium of between 10 and 15% according to analysts. And remember, this was a 1,000 crore IPO that was oversubscribed about 38 times. If you're wondering what the company does, it is a leading manufacturer of computer numerical control machines and has a strong order book from both defense and the aerospace industry. In fact, I would encourage you to look at the All You Need to Know story with regard to this particular counter on the website ndtvprofit.com. That brings us to the end of this particular edition of All You Need to Know, but lots more that you need to know about before the start of trade. You'll find all of that in India Market Open. Do stay tuned. This is NDTV Profit.